Recession concerns aren't top of mind for real estate agents, at least just yet. Only 12% of agents are worried about an economic downturn this year, compared to 36% of respondents predicting it could happen in 2021. This is according to a new survey from online real estate platform HomeLight. And join us to discuss is HomeLight's Chief Operating Officer, Sumant Sridharan. And Sumant, digging into the numbers here, it's interesting because 48% of brokers characterize the housing market right now as a seller's market, and that's certainly been the trend leading up to this moment in time. So do you think that trend continues here in 2020?
Yeah, agents are surprisingly optimistic about 2020, at least versus, I think, the general punditry out there. And, we really take a lot of stock into what these agents say. These are the top, 500 agents in the U.S. based on HomeLight data. And these folks are on the ground working with clients every day. And, over 75% of those agents do not believe we will have a recession in 2020.
Yeah, what's interesting, too, is that 89% of agents surveyed believe the market inventory will either stay level or rise, which is interesting considering the fact that we've seen so much new inventory come on here and the fact that supposedly existing homes are tough to get, at least in some parts of the market. So what are you seeing in regards to that in terms of demand and what that might mean for inventory moving forward?
Yeah, so the common theme that we're seeing when we talk to agents is this recurring notion of slow and steady growth in 2020. So you've noted there's been some, kind of major trends we're seeing around price flattening. Mortgage rates are staying low. Unemployment is at historically low levels. And I think the combination of that is giving, agents and others a lot of belief that, we'll see this slow and steady growth throughout 2020.
Hey, Sumant, it's Heidi here. So a quick question. Agents are optimistic about the housing market here, but I want to talk to you a little bit about technology and the rise of technology in this space. Of course, we've seen technology disrupt a lot of different industries, but how is that really playing a role in the housing market and housing industry?
Sure, that's a great question, Heidi. So we're a real estate technology company based in San Francisco. Certainly, we believe that the role technology will play over the next 5 years will impact, the way we transact real estate in a manner that we haven't seen for the last 100 years. So we're excited about that role. We think it's going to be good for consumers. The biggest way you're seeing it manifest itself, there's a couple of big trends, right? There's the iBuying trend in certain cities like Phoenix and Las Vegas and Atlanta. You're seeing iBuyers gain 5-6% share of the market. You're seeing people start to view homes as an asset class, much the way that they would view stocks. So companies like Airbnb have allowed consumers to make money and make income off of home ownership in ways they haven't been able to do so in the past.
Yeah.
So yeah, we definitely believe there's a lot of ways that technology is going to impact the way we transact real estate now and in the next few years.
Hi, Sumant. This is Ryan Payne from Payne Capital. One question I have is it regionalized? Like, for instance, say the market I'm from Philadelphia, for instance. Is that different than the market in, say, New York, which had one of the slowest price increases last year that it's had in a long time?
Yeah, I think for sure, right? In the larger cities, you're seeing prices flatten. There's limited inventory. Certainly, in my hometown of San Francisco, there's one of the big topics of conversation is are these supply constraints within the city, which is really forcing people to get creative about how to live outside the city. What we are seeing, though, is in smaller cities like Phoenix and Austin and Portland, we are seeing still a lot of price growth, and that's due to new companies and really migration into those cities.
Yeah.
That is pushing prices up.
Well, Sumant, let me push back a little bit on the idea of the seller's market continuing here, because we did see Q3 and Q4 that equation even out a little bit, shifting over from a seller's market more in even equilibrium, shall we say, between sellers and buyers. But moving forward, too, obviously 2019, we got 3 interest rate cuts, mortgage rates, as you pointed out at the top of the interview, at pretty much historic lows. When you're looking at that, though, moving forward, the Fed largely expected to keep things steady here. And who knows? Really, who knows what happens with the Fed? What might happen if we see the reverse? What if we start to see mortgage rates tick higher? And what might that do to the housing market if people might have been bracing for maybe even lower, got caught in that trend of lower and lower interest rates?
It's a great point. So I think, first of all, most people don't think, with the current administration, those rates are going to go higher. But if they do, you're certainly correct. Mortgage rates are probably the biggest determinant of a variable that could impact the housing market over the next year. That being said, what we're also hearing from real estate agents is that 70% of sellers typically have made the selling decision regardless of the market. For example, they need to sell because they're moving out of town, or they're retiring or moving to a retirement home. So there are many times structural reasons for why someone might sell their home that go beyond trying to just maximize their home value.
All right, very interesting stuff. Sumant Sridharan, COO at HomeLight. Thank you so much for joining us. Appreciate you taking the time.